Good morning. This is BloombergQuint Live and I'm Menaka Doshi.
You're watching Indian Open. I'm Niraj Shah. Good morning, Menaka. Good morning, Ira.
Good morning.
Good morning and very good morning to all of our viewers. Let's get straight to the headlines. India's rank in the World Bank's Ease of Doing Business Index moves up by 30 places to 100. Improvement in paying taxes, resolving insolvencies and easier access to credit helps. Core sector data growth hits a 6-month high with growth at 5.2% in September. Fiscal numbers look healthier as well. Hero MotoCorp, Tech Mahindra are two nifty companies coming out with earnings today. And the country's largest general insurer, New India Assurance, sees its IPO open for subscription today.
Well, it's an interesting start that we may have to the session today. Remember, the global markets seem to be doing okay. The SGX Nifty indicating a start, which is about a third in the green. So we'll have a start which is good. Whether we remain quiet post that or no remains to be seen. In all likelihood, we could. A bunch of ADRs in the green as well. So just to get the numbers out of the way first, you look at almost all of the banking ADRs or select tech ADRs. All of these did well in trade yesterday. So these could be the reasons why we could start off about a third of a percent in the green. But as far as the trade setup goes, I think all eyes out on the Fed decision, if there is a decision, frankly, but maybe the commentary or otherwise.
No, there will be a decision.
Yeah.
If there is a change.
Yeah, if there is a change, yeah, that's what. Or the POA decision, wherein most people or the currency markets are preempting a decision coming about, and that's something that we'll discuss over the next couple of days. I'm sure Ira will have a lot of thoughts on that too. But the domestic markets, I reckon, after starting off higher, may remain quiet, maybe all focus at the broader end of the spectrum. But hey guys, post-market hours, two great pieces of news on the macro front, if you consider them great. But yeah, both on the ease of doing business as well as the core sector data, which Ira alluded to. I think the fastest pace this fiscal year, if I'm not wrong. And that could be reasonably comforting just before we get to stocks.
Yeah, 100% it will be. The numbers are good. The numbers are sequentially good as well. So you've seen an uptick. We'll talk about that in greater detail. So good news from the core sector.
Yeah, so that's two. And earnings not too bad, guys. So one, Bharti Airtel, operational beat. ARPUs, yes, have had a bit of a pressure.
Consistently fallen over the last several quarters. And they continue to decline.
And the lowest. But operationally not a bad set of numbers. Brokerages have not been too perturbed with this ARPU correction as well. And interestingly, Bharti Airtel...
Well, if you come to anticipate, you see, the thing is, we judge all earnings based on expectations, and expectations start baking in declines.
Yeah.
So, you know, when we say, oh, it met street expectations, that doesn't mean much if the numbers have actually declined. Right? Yes. So I think that's the fundamental flaw in the way we judge earnings. But the fact is still that you've seen ARPUs decline quarter after quarter for now, what, 4 or 5 quarters? I'm sure Somit will correct me, but... Yeah. And that can never be good news for any company.
Yeah. So the only question from a trade perspective is whether the market or the price is baking in that expectation for the near term. I'm really not talking about what happens over the next 6 months. But in today's session could be an interesting day of trade. But for Bharti Airtel, Menaka and Ira, more importantly, other than just the news, the fact that this whole talk and officially now about their intent to sell the controlling stake in Bharti.
Oh, we discussed this yesterday, right? I mean, I think they've gone back and forth on this. First, they did announce that they were going to do it. Then they said, hey, we might not do a controlling stake sale. We might do only bits and pieces. Then they said we put up a board committee to look into a controlling stake sale. Yeah. Now they've come back and said the board committee has recommended a controlling stake sale. We have some offers on the table. So we'll look at them and let you know what's going on. Yeah. So, yeah, I mean...
Yeah, so maybe all of those things could keep Bharti in news today. Difficult to envisage, frankly, what will happen to this one. The easier one, though, guys, I think, by the way, there's a big brokerage upgrade on Bharti Infratel, Airtel, which could keep that stock excited as well. These days, typically, even large stocks move a bit on that day because of a large brokerage upgrade. So let's wait and watch if that happens on Bharti. The interesting one, probably the easier one to predict today, would be Interglobe Aviation. Personally thought extremely good set of numbers, operational beat that came in as well.
Based on compensation credits. Wow.
No, well, so yeah, you could argue that the profit boost came in because of that. But then let's face it, their revenue growth consistently has been on an uptake, and we'll talk about that in detail. Yeah, but I would personally believe that all of those factors notwithstanding, just the fact that there are tailwinds to the sector and the quarter numbers are better, could well keep this stock in focus in today's session as well.
I'm sure we're going to discuss aviation in a bit more detail.
And yeah, I think the focal point of this quarter, to my mind, across a bunch of companies is the intent, if not the execution, of trying to keep operational costs down in a big way. We've seen that trend across large caps and mid caps. and that trend continues in today's session, or rather, the results that came out post-market hours, a bunch of these companies, VST, Sanofi, I mean, even Bharti and Indigo, it was all about trying to keep operational costs under check.
Because if revenue is not growing, what else can you do?
Yeah, so all of these companies, because of the...
But Niraj, that's a negative for anybody who looks at corporate data, earnings data. It's actually, I mean, negative in the sense that the only way you're able to show any bottom line improvement is through cost control, and not necessarily, I don't want to broad brush, not necessarily through top line growth. So, because the market is anyways knowing, or let's assume that we are all factoring in that the revenue growth is not coming in, are the companies trying to do their best to at least manage the cost operationally? And some are managing, some are not. So you kind of look at the ones which are managing these costs and reporting better EBITDA numbers a bit more favorably. Someday we'll argue about how the market looks at everything with one eye, right? No, but no prizes for guessing what's on first word today. Ease of doing business improves in India. Booyah! I planned that word. How much should one read into the positive macroeconomic data that was out last evening, and it's looking good. It's the first day of the month, time for auto sales data, but will October be a good month? And we'll also talk about the aviation sector, which has witnessed steady growth in passenger traffic this year. Is it going to be smooth flying from here on? We're going to talk about that and the Indigo earnings. I have no doubt, but we are going to first kick it off with that ease of doing business survey that was out late last evening. India jumped 30 places on the World Bank's Ease of Doing Business ranking to secure the 100th spot. The country becomes one of the 10 economies that improved the most this year. And I'm sure by all measure, however skeptical one may be of this data, and I don't mean for this year, for all years, right? So we're not being skeptical only in the year that it improves. However skeptical one is of how useful this data is and what granularity it gives you, the fact that we've improved 30 spots is great news. Great news, isn't it? And it comes on the back of, I think, some relatively interesting, how do you put it, parameters. And we'll bring that up for you, exactly what the World Bank has said. The 8 things that the World Bank said works well for ease of doing business. So India was amongst the top 10 reformers, which is why we've seen such a big move up. And these are some of the things that India did right. So single window system for the approval of building plans, better tax, so how do I put it? Better paperwork, easier paperwork. So a SPICE form, combined application for PAN and TAN, shorter completion times for EPFO and ESIC applications, a joint application form for Mumbai VAT and professional tax, the new insolvency and bankruptcy code that we've all been discussing for several months now. Also in terms of trade, improved infrastructure at the Nhava Sheva port in Mumbai counted towards this improved reform. Reduced merchant overtime fees, these were abolished in Delhi and Mumbai. Increased use of electronic and mobile platforms under the AEO programs. So a whole host of seemingly small things that have all contributed towards a fairly big jump for India. And I think there was just one other chart I want to bring up, because I know our audiences would probably have now overdosed on this ease of doing business conversation. And that chart just goes to show, actually, and if we can pull it up, it goes to show how South Asia has done versus certain other sectors in the world in terms of improved reforms, but how certain measures that have actually made it difficult to do business has, sort of meant that the net gain that has come to some regions has been much less. And for some reason, that chart is not firing on screen. But what the chart effectively says is this, that we did a lot of good things to make it easier for business to do business in India. But we also did a few things that made it tougher for business to do business in India. And therefore, our net gain was maybe not as dramatic as it ought to have been. We've heard from a whole host of government officials last evening on how they're working towards improving the areas which didn't see enough improvement, starting up a business, construction permits. All of those things need, more attention and focus. And I think the Narendra Modi government's target is that we get somewhere to 50. Yeah, in the next couple of years. And I don't know how realistic or unrealistic that is, but any effort that gets us anywhere closer to that number can only be applauded, right? So, absolutely. I mean, all good news.
And I think they made the point. So I don't think GST has been accounted for yet. I don't think RERA has been accounted for yet in this list of reforms that the World Bank talks about.
Yeah, so, I think
so the government seems to suggest that, you have a natural move up coming once those come into place.
I was talking to the World Bank South Asia head, who actually does the collation of this. And she said that we look at both, this is exactly what we were discussing yesterday, that we look at both legislation and implementation of legislation. So hopefully by the time they do the next count, if all the wrinkles have been ironed out in the GST implementation, including in the RERA implementation, these will count in a big way towards, you know, sort of improving the environment for business. The other thing that India scored very high on is minority protection. Protection for minority shareholders, and for all the complaining that companies do about what the Companies Act has done, or thereafter what the listing agreement has done, or the listing regulations now, all of this is counted towards an improved environment for doing business in India. And I think finally that chart did come. So this is the color-coded chart that gives you an idea of where India has improved. So all the green spots tell you that these are the factors in which India has shown improvement in the year 2018. So as you can see, the two spots where we haven't shown dramatic improvement is setting up or starting up a business. That's the third one in the row. And then you've got registering property. Those are the two where are yellow and orange, and the second from the last, trading across borders. Those were the three weak spots that came up. Everywhere else, we've shown improvement in the ease of doing business. So this chart gives you a fairly good idea. I mean, the amount of green you can see in the year 2018 tells you how much improvement we've made over the last few years. And I think we managed to finally bring up the chart that I was talking about as well on South Asia versus the rest of the world. And I hopefully, well, no. Okay, that's playing with me today.
Ease of doing business.
Ease of firing graphics, yeah. There you've got it. So, okay, that's what I was trying to show you. Look at the pale blue column. South Asia, that pale blue column represents the average number of reforms that have made it easier to do business. The orange column represents the average number of reforms that have made it difficult to do business. And then the green column represents the net gain. And if you can see in South Asia, we've done a lot to improve business. But we've also done a little bit more than the others to make it a little tougher for business to, you know, sort of do business in India. And therefore, our net gain is a little lower than some of the other regions. And South Asia would predominantly, I would imagine, be driven by India, you know. So I think that was one of the most interesting things I thought that came out of the World Bank report last evening.
All right, so that's...
deep contribution to the conversation from both of you.
Hey, no. You were so good, we didn't need to part.
Oh, yeah, exactly.
Damn. Can't wait for the week to end.
All right.
It's Wednesday, Menaka. Only Wednesday.
Oh, we have only 2 days to go.
Yeah,
isn't that how you count it?
Yeah.
No?
Yeah.
Hira's happy because we got some great core sector data last year.
Yeah. So, you know, there is survey and there is data. The survey is bringing good news for the Indian economy, but the data is also bringing good news for the Indian economy. And this is hard data, so you can't discount it with opinions. Core sector growth came in at a 6-month high. So if you look at the numbers, you got 5% plus growth in core sector. You've been steadily climbing up, as that chart shows you. So we were at about 1% in June, and you started to improve. And now you're at 5.5%. Core sector, remember, is a large contributor to the industrial output numbers, which we'll get later in the month. So those are also likely to look strong. What's growing? Coal is growing again. Coal sector is doing well, so that's seen a 10% year-on-year jump. You know, you will adjust for bases, etc., but I'm giving you the year-on-year numbers. Natural gas is doing well at 6.3%. Steel is okay at about 3.7%. Electricity at 5.2% is actually slower than last month, but still relatively steady. Some of the sectors which are not doing so well was steel, was cement. Cement was not particularly strong. Fertilizers was not particularly strong this month either. But good numbers. And remember, we had at the start of the month or midway through the month, you know, talked about the fact that how the October data that we got, or the data we got in October, was all looking better sequentially compared to September, most of it at least. So if you see that extend into October, that will certainly be good news. The fiscal situation, that's the other number we get at the end of the month. Again, these numbers were slightly stronger than what we'd seen last month. So in the April to September period, we've taken out about 91% of the fiscal target compared to 84% last year, yes. But in April to August, we were at about 96%. So things have improved in terms of revenue collection. The capital expenditure numbers are actually still lower than last year. So you've done about 47% of the capital expenditure budgeted compared to 54 or 55% nearly last year. Revenue expenditure is where we are running a little ahead of schedule, and that's more than last year. But overall, the numbers are not worse, because, you know, if you're at 96% and you've gone to 98, 99%.
Yeah, that would just leave you with very little room for any additional spending, right? Not that 91% leaves you with any dramatic further room. Just to go back to the core sector data, I saw some economist comments last evening reacting to the data suggesting that the weakness we saw in steel and cement relative to the headline number was a little worrying in terms of industrial activity. Is that how you read it as well?
I think you can slice and dice the data whichever way you want to fit it into your overall narrative. But at the headline, and you want to give some credit to the headline.
Oh no, I'm
numbers,
not taking away from the headline number at all. I'm just saying,
but
which parts of the economy are performing and which are not.
Cement was weak, which was surprising because I mean, housing is supposed to be firing up. All the conversations we've had have suggested that it may not be firing up as much as conversation around
it.
Right? This is September data.
So could it have been that we had an extended monsoon this year, didn't we? Across the country. So
there could have been some
maybe the delay in return, the return of.
But that would have impacted coal as well. So coal is strong.
No, but there is a dichotomy, right? Because all the cement quarter numbers that have come out until now are speaking about fairly good July, August, September quarter volume uptick for all the three large majors. We haven't gone down to the minors as yet. We'll get to know. Maybe the regional players have suffered and maybe the pan-India players haven't. But Ambuja, ACC, Ultratech, I mean, Ultratech, you could discount that the JPM numbers were played, but Ambuja, ACC, the volume uptick numbers were fairly strong, and that accounted September too.
Yeah,
so there's a bit of a dichotomy.
Curious on how they account.
Yeah, but it's never possible to look at individual company results, not at an aggregate level, but 3 or 4 large players and extrapolate it to the overall sector, especially not in cement. It's too fractured a sector despite the perennial consolidation that we keep talking about.
Yeah, no, it is too fractured.
Which never happens, by the way.
No, that's a separate story.
The consolidation has happened.
No, as in regional players have remained regional. You probably had 2 or 3 large players getting in and JPM coming in.
Big improvement since the years I started tracking cement, in which I think having a 1 million ton plant capacity was like the beginning and the end of ambition for most cement players. Yeah, but why hark back in time? Let's look forward. Later today, we'll get auto sales numbers.
Yeah, they should be.
Now, they may have slowed down their sales run in October. That's according to a BloombergQuint poll. And that's because of the difference in the way the festive season has played out between last year and this year. Isn't that right, Yatin?
Absolutely, Menaka. And if you look at the last year's base, that was high because of the festive season. And this time, probably we couldn't see the kind of growth that we saw last year. Now, if you look at companies like Maruti, of course, they will do well. Given the fact that we have healthy bookings coming in for Baleno, Brezza, the new Swift Desire, the order books, the sheer size of order book will lead to a growth. Remember, they are in a capacity constraint. So 12 to 13% is usually what Maruti can do at the higher end. As far as Mahindra & Mahindra automotive and tractor segment is concerned, we'll expect a deep decline there. Of course, in the last 3-4 months, we have seen tractor sales pick up. But clearly, the kind of numbers that were delivered last year, the base is so high that probably, on the Mahindra & Mahindra tractor, despite posting a 40,000 plus kind of a tractor sales number, will see a decline of 15%. Of course, Tata Motors, given the fact that the commercial vehicle base was small, probably we could see a 3 to 4% growth there. And more importantly, for the passenger vehicle segment, given the fact that there has been a very big increase in their overall sales, we could see an overall growth of 4% there. Ashok Leyland, keeping up the momentum. Last year, the commercial vehicle base was small, so we could expect a 8 to 10% growth there. As you can see, the kind of figures that I'm talking about, so M&M tractors probably, despite a 38,500, 40,000 figure, could see a decline given the fact that they posted a sale number of 45,000 last festive season. But this festive season, they were able to do a little over 50,000 units, and this is how you can see the overall matrix. Of course, two-wheeler players will be in focus. Remember, we have various brokerages like Motilal Oswal and SBI Cap Securities talking about the fact that there has been a very large inventory pile-up as far as the two-wheeler players are concerned, and probably because of the pile-up that we saw in September, October will not be that great. So Hero MotoCorp, flattish kind of a sales figure. Bajaj Auto, remember, we have not only the domestic market picking up because of a low base, but the export markets are also extremely doing well for a company like Bajaj Auto. TVS Motors, the beauty is that despite the decline in the motorcycle sales, the scooter sales have seen double-digit growth. So the overall volume picture will not be that bad as it was a few months back. And Royal Enfield, clearly on the other kind of order book that they have, which is the premium biking segment, because of that we could see a 20-22% growth. So largely, two-wheeler players expected to remain flat on a year-on-year basis.
But that's because the festive season got broken up this year between September and October versus last year, all of it coming in the month of October, right?
Yeah. And more importantly, there is a decent amount of inventory pile up, in the motorcycle segment. Scooters are doing well, but motorcycles are not doing that well.
What is that? Very ambitious restocking after GST?
Yeah. Restocking and general anticipation of a very good, festive season, given the fact that we had good monsoon. So Hero Moto derives almost half of their sales from the rural markets. Of course, there were good sales, but the kind
they
of...
did very well, right? Didn't they report that 3 lakh number?
Yeah, but the kind of inventory pushes that happened, and remember, during that BS4 transition period, all these two-wheeler players had given massive discounts. So, we had a lot of sales happening in the last 3-4 months, and probably that base effect or that demand effect will probably play out on two-wheeler players.
Yeah, I must add, we spoke to Escorts yesterday.
Yeah, I know. You had an interesting conversation on tractor sales.
Yes, so because of that quarter and the stock did come off a bit, but he mentioned that October will be a soft month. I mean, we tried to ask him in 2 different ways, but he was fairly candid that October will see a soft month for tractor growth. And when asked about whether November and December could actually show a good jump because of the base effect due to demon, he mentioned that yes, the base effect may result in the optical number looking good, but it almost seemed as if he kind of mentioned that the O&D quarter will not be really that good.
O&D quarter?
October, November, December quarter will not be all that great for tractor companies.
O&D.
Yeah. You could well say OMG as well, yeah? Oh
no, I don't
God.
know, but what do you do? So you do this, I'm so sorry, we're taking away from your auto sales data, but this deserves attention.
Sure.
So it's what, JFM?
Yes.
When did this start?
AMJ.
Please tell me some brokerage report did not start this.
Some time ago.
It must have been a brokerage report.
Please tell me, Niraj, you didn't invent this.
No, I didn't invent this.
It has to be a brokerage report.
No. Okay, so October, November, December quarter, I think Bharat Madan quite categorically mentioned that it won't be necessarily a great month.
Did he mention why he thought that was the case?
He just said...
Because tractor sales have done rather well in the last couple of months.
They're coming off. So as Yatin said, I think October will also be a slightly soft month. And Bharat Madan kind of reaffirmed.
Yeah, and in the analyst conference call, so remember, the management of Escort spoke to us exclusively before the analyst conference call, in which he gave
brownie
details.
point scoring there, early morning.
Yeah, and post the analyst conference call, I think a lot of brokerages have been talking about the fact that in the next 3 to 4 months, probably we could not see very high growth in a tractor segment despite having a good monsoon, because probably the base effect will pan out, or probably the kind of sales that they have done in the last 3-4 months, probably that effect might also lead to slower growth. Growth will be there, of course.
Maybe the earlier sales that have happened in the year. I don't know if that's the reason, quite frankly. I mean, because otherwise, the base is really favorable for almost all auto companies, November and December.
Base is favorable for everybody, and nobody should look at year-on-year numbers in November and December for anything. I mean,
yeah, but which is
because of the demon effect.
Yeah,
but because what you're saying that despite that, optically it may look great, but otherwise maybe not necessarily.
Then it shows that things are perhaps not as good as some of the earlier numbers it suggested.
Yeah. Let's wait and watch. We'll get to know the commentaries from a lot of these companies will come out during the course of the day, so stay tuned to BloombergQuint for that. And now, aviation, and the reason why just trying to do this today, one is the Interglobe Aviation numbers, which I thought was a pretty healthy number. Yes, you could argue that there were these compensations that were given, but those are because of issues, right? I mean, there were grounding issues that had happened, and as a result of all of that, yes, there were some credits that were given, but if you just look at pure play numbers, passenger growth wasn't that bad. 27% growth in revenues, 13% growth in passengers, but that was, as I said, was largely maybe because of the grounding of planes and otherwise. Had it not been the case, maybe the passenger growth too could have been okay. And while there were credits received due to aircraft grounding and delivery delays, but the net profit boost was substantially higher. I mean, I was looking at the numbers, and consistently, month on month or quarter on quarter, the revenue growth for Interglobe Aviation and SpiceJet has been pretty strong. They kind of maintained their numbers or increased their market share. Jet hasn't been quite able to do that, but the other two have managed to do that. But the reason I thought we should kind of bring this up is because of the conversations. I mean, this is emanating from the fact that a lot of marquee investors have now started believing that aviation could well be a sector that they could well bet on. Now, we all know the famous investments that Warren Buffett made in 3 aviation companies end of 2016, and that was a departure from what he earlier said, that aviation is a business that he will not touch. Now, we could argue that Indian aviation is starkly different from global aviation, but 9 months into that event happening, with the kind of numbers that are coming in, the valuations that these companies are trading at, people believe that maybe there is some certainty to earnings because of the assumption that crude will not go back to $100 per barrel. Now, that is the base assumption, and then the passenger growth that we've seen. 2 or 3 things out here very quickly, and you guys feel free to come in. We'll make this quick. The near-term headwinds, wherein crude has gone up to $60 a barrel, September domestic passenger growth was 16.5% versus 20% growth seen in peak period. For 15 consecutive months between November 15 and Jan 17th, passenger growth was 20%. It's come off to 16.5% in September. Most people believe it will come back in the October, November, December, not OND, October, November, December quarter, because it's the high tourist season as well. So that will play out here.
Not if you're going to Agra or Fatehpur Sikri.
Well, maybe that's not the peak aviation traffic area, maybe.
True.
So that is the headwind. The tailwind, passenger growth, even though it's come off in September, has been in double digits for 38 consecutive months. Now, that's a long time and shows a trend. If this doesn't show a trend, I don't know what does. 3 years and 2 months is a trend for aviation companies. Crude prices, albeit higher, not at alarming levels. That's the base assumption that every analyst, every investor is making, that crude may be 60, maybe 70, will not go to 100, and that's not bad news for aviation companies. And as I said, if indeed the passenger traffic growth does improve in this quarter and the next, which is a departure from the first 6 months, wherein the first half was marked by higher fares and lower passenger traffic, most people anticipate this will turn around.
Just a small point on that passenger traffic. I think I'm desperately looking for that chart and I can't find it right now, and I'd spoken to you about this earlier as well. I think the story also lies in the fact that airlines have consistently been taking away share from the railways. So this 38-month growth that you're talking about, it's come on the back of, yes, perhaps some months of strength in the economy, some months of not strength, but in the weak months of the economy, if they continue to take away share from the railways, I think that's great news. It shows that the sort of the penetration of aviation is growing. And now I don't know, I mean, this is all hypothetical, but if the whole Udan scheme, etc., takes off and you do manage to get regional airports and regional airport connectivity stronger, then perhaps that trajectory of taking away traffic from the railways will continue. So, I mean, I'm talking long term, not stock specific or anything like that, but I'm just saying long term.
Yeah.
I know Buffett changed his mind on airlines, but I remember Captain Gopinath once taught me very clearly. This is after he launched a low-cost airline, where he laughed and he said that, Menaka, I don't think there can be anything called a low-cost airline in this country because 60–70% of your cost is fuel. So it's a big bet to take, and I think you worked out some per dollar increase in fuel impact on earnings.
Yeah,
right?
This was from a report and it mentioned that INR 4 to 5% and 1% change in crude will have an impact of 3 to 4%.
Yeah.
And whether the airlines have the pricing power to indeed offset.
So we hadn't anticipated $40 to $60.
So short.
Yeah, so quickly.
Yes.
And given all the OPEC agreements that we keep hearing about, and the Russia playing along with this, it's very difficult to have any visibility on crude prices. So for me, that would be the highest risk factor in this, notwithstanding the fact that this country is, sort of underserved in terms of aviation, and there will always be tremendous passenger growth to avail of in that sense. So.
True. Yeah, so that remains the biggest overhang, everybody knows. But hey, just one last thing, despite the crude prices going up, and it'll be interesting to get a word from the airlines. I mean, if Indigo were talking, we would ask them that. The fuel costs were 6%. Much fuel cost increase, was 6% versus the revenue increase of double digits, 15–16%. And the fuel cost as a percentage, Somit was telling me, was 31% versus 37% YOY. So fuel cost as a percentage came off despite the fact that...
So they've done some very good fuel cost management. They've done some good cost management is what all the analyst reports seem to be suggesting as well, post that conference call that they did. So that yield management has been better, other operating income has been better, compensation credits have been better, which is why the numbers have, I think, come in better than expected. So.
Yeah.
And but that's just pure earnings, and the growth potential is crazy, but we go into the winter OND season, which is the winter season. It's the driving season in many parts of the world, including in the US. It's also the heating season. So, near term, you want to keep your eye on crude in the process of all of this, right?
Yeah. Put in points.
But I'm not telling you anything new, so we can move on.
Yeah, no, but that's about it that we have on First Word today, though.
The big takeaway being OND.
Well, the big takeaway being, while we'll talk about markets and macros with you or Bhat, and we'll ask him about the OND quarter, but a lot of very interesting conversations lined up a bit later on. So, is mid-sized IT or mid-cap IT better suited to the digital revolution? We asked Sudin Apte of Offshore Insights and Prabal Basu Roy, former CFO at Polaris. And we decode the earnings of IIFL, which has posted a fairly decent quarter with the group CFO Prabodh Agrawal. So all of that happening over the next 1 hour. Stay tuned to BloombergQuint for that. Okay, full tilt towards the day's trade today. Quick check with Agam Vakil about the derivative space. Agam, good morning.
Good morning, Niraj. The Nifty's holding on to the mark of 10,300, and we really haven't seen too much change when it comes to open interest. That said, just about 1% gain as far as open interest is concerned. On the other hand, unwinding seen in Bank Nifty futures. So while the index itself remains flat, there's about near 2% decline as far as open interest goes. In terms of variables, we're looking at the India Volatility Index, which has moved up further, now firmly above the mark of 12. That could get some of those near-term bulls worried, given the anticipation of increased volatility. And, with that, we really haven't seen too much change in the Nifty put-call ratio, considering it's just moved up to around 1.45 as against 1.42 day before. But in terms of changes in open interest across the series, we have seen the most amount of activity in the 10,200 put, which has seen substantial increase in OI. On the other hand, unwinding in the 10,700 call, as you can see here. But what are those stocks that I'm keeping an eye on? We have Indiabulls Realty, which has moved out of the F&O band, so we can expect an increase in volatility there. And we're also looking at fresh longs building up in the counters such as NIT Technologies as well as Bharat Electronics. So those are some of those counters in the mid-cap space that I'll be keeping an eye on today.
Okay. Thanks a lot for that, Agam. Abhijit Pathak, Director at Definet Solutions, with us on the show as well. Abhijit, good morning. Thanks for joining in. Actually, briefly, Abhijit, before I start with the markets, a quick thought on Indiabulls Real Estate, perennially in an F&O ban, getting out of F&O very, very soon, but out of the ban today. Could there be some reactions thereof?
Yeah, actually, normally when a stock goes out of ban, there is action typically, and even on the chart, it is looking good. I expect it to rise maybe 2 to 4% over the next few days.
Okay, fair call. Quickly, Abhijit, what about the index? What do you expect it to do today?
Like the last 2-3 days, just nothing is happening on the index front, including Bank Nifty as well as Nifty, and this is due to the heavy open interest at 10,400 of calls and 10,500. And no one is, the 10,400 call writers are not writing, not covering, and because of which the pressure on Nifty remains at the high levels, 10,400, 10,420. So I wouldn't be very surprised if the gap up opening which SGX is suggesting is faded in the next couple of hours. I wouldn't go long at those levels, definitely.
Won't go long at those levels. What about specific stocks, Abhijit?
One stock which is looking good is Adani Enterprises, which around 132, 133, it is a good long with a stop loss of 131. And if it closes above 135, it can give a good rise above 140 and maybe even 145.
Okay. Thanks, Abhijit. Thanks so much for joining in today and giving us your thoughts. Always a pleasure talking to you. Let's move on, talk about the commodity space as well. Pradeep Pandya Johnson to talk about that and take the show forward. Pradeep, good morning.
Good morning, Niraj. So let's look at crude first of all, which you guys were also talking about. The compliance has improved quite a bit. That is what the data which is getting reported now is suggesting us. OPEC and Russia both have significantly improved compliance. If you look at OPEC's October output data, which is reported, is estimated to have fallen by around 80,000 barrels per day to little under 33 million barrels per day. And Russia is seen cutting its output by around 300,000. That's 3 lakh barrels per day. So that's really significant, and that is what has been keeping the crude prices at elevated level. Well, if you look at gold, it's kind of wait and watch ahead of key data from the central banks. Fed statement would come out today, and then tomorrow the Bank of England is most likely to announce a rate hike after a decade or so. Well, if you look at other commodities, I think nickel is one that we should be talking about. 2 years high in this one. It has surged around 23% this year so far. If you look at other metals in early Asian trade, steel and zinc have traded higher for the second day, while aluminium has come under some profit booking, and also copper.
Okay, quick check on what the global markets are doing before we go on to what the earnings heat map is showing for the day. Remember, we'll start off with a bit of green because the rest of the world is showing that fair bit of green. About 1/3% for the SGX Nifty, though Abhijit Pathak did say that he believed that this gains will vanish within the first couple of hours of trade. But for a change, today the earnings heat map is showing more green than red. And Darshan is here to tell us which companies stood out and which did not. Darshan, good morning.
Yeah, you're absolutely right. It's been a while since we saw so much green on the screen. So basically, and it's the larger companies that have come out with stronger set of numbers, Interglobe, Bharti, Airtel. So these are the companies that have come out with strong numbers, and the red ones are the weak one, including DV's Lab and JSW Steel. So these are the two ones that came out with weak set of numbers. Let's talk about some of the numbers that came out. The others have been covered in detail. So Syndicate Bank, strong numbers. The NII was up close to 7%. Profits up almost 27%, so strong. The provisioning came down significantly, but look at the asset quality. There seems to be a lot of improvement as far as asset quality is concerned, so the market probably will give this the thumbs up. The next one is VST Industries, very strong set of numbers. Revenues were down 2%, but they've done a lot of cost control. Profit up almost 42%. Even if you're looking at the EBITDA margins coming in at almost 32% versus 22%. Even the EBITDA showing a growth of almost 39%. So that's the view that's coming in on VST Industries. You also had KPIT Technology. Niraj, we were speaking about how mid-cap IT seems to be outperforming. We've seen that with the case with Nucleus and Saskin. Now KPIT came out with a strong numbers. This is on a quarter-on-quarter basis. So a 5% growth over last quarter in terms of revenues and 8% growth on the bottom line. Even margin improvement coming in from 9.1% to 9.8%. So strong set of numbers. Among the weak set of numbers, JSW Steel, the standalone numbers were decent for JSW Steel. They missed the estimate, but it was basically the subsidiaries that did not do well. Realizations came down. So net sales was up 27%, profits were up 29%. But despite the fact this happened, their margins came down and they missed analyst estimates. And the final one is DV's Lab. Very poor set of numbers, missing all estimates. So revenues were down almost 11%, profits down 7%, margins also coming down by EBITDA coming down by 5% because of the calculation. EBITDA margin is higher, but they had a forex gain this time around, the import alert weighing in, and because of this drop in 11%, it means that they had said that for the full year they expect a flattish growth. So in the first half they have done a degrowth of 10%. So they will have to probably revise their guidance. Is something that the street is anticipating.
Thanks, Darshan, for all these details. So Darshan's heat map is looking green today, Niraj. That's the good news.
Yeah, pleasantly surprised, right? After 4 days or 4 or 5 days, we're having some bit of green on the screen.
And a significant name like Bharti Airtel.
And Interglobe Aviation and a couple of others. Let's talk about that with Mayuresh Joshi, fund manager at Angel Broking, joins us right now on the show. Mayuresh, good morning. Thanks much for taking the time out. Let's start with the big boy, Bharti Airtel. ARPUs consistently down, operationally a beat. The stock also in news for, well, on manner of speaking, confirming that they will sell off the controlling stake in Infratel. What do you think all of this does to the company today or over the short term?
Morning, Niraj. So largely, again, I think the telecom sector is coming from a seasonally weak quarter. So Q2 is expected to be weak, and the competition intensity has probably rubbed on to the ARPUs, which have got reported at 145 odd rupees. At the same time, I think the net debt has got ballooned to 91,480 odd crores. These are obvious signs that spectrum cost, the elevated OPEX and the CAPEX requirements in keeping up with its competitors is probably taking a toll on their bottom line. But the encouraging sign is coming in from data consumption. So if you look at the data consumption figures, 784 billion megabytes is consumed this quarter, which is a substantial jump on a year-on-year basis. So I think as tariffs are coming down, specifically on the data front, they are very well getting compensated on the volume growth front. And that trend will very well continue as the industry goes on through consolidation. You might very well argue that ROCEs have actually come down because of these factors of spectrum and elevated OPEX and CAPEX to 5.1%. But again, I think over the next few quarters, I think the bottoming out in the industry should be very, very evident. But again, I think the lumpiness and softness should continue as the industry tries to probably grapple in terms of lower ARPUs and again trying to offset that in terms of compensatory data volumes. So from a valuation perspective on EV/EBITDA basis, I think fairly valuable. But again, I think the stock has performed to analyst expectations. So I think the hold rating continues. Not expecting a major downtick onto the stock, at least on today's trade.
Well, the rating is hold and not buy after a significant up move in this stock. But, another interesting sector, JSW Steel and also Tata Steel before that, this has been an outperforming sector, but numbers as we see have kind of missed analyst expectations. What's your call on these stocks?
Morning, Pradeep. I think if you look at the expectations, I think the expectations for metal companies were always on the higher side, considering the low base that they were coming on a year-on-year comparison. But largely, again, I think if you look at JSW Steel numbers, for example, the expectations on EBITDA per ton was substantially higher. I think the rising coking coal prices and the rising zinc prices, coking coal prices actually doubled on a year-on-year basis. I think that's taken a significant toll, both in terms of margins, and that is probably reflected in terms of how domestic demand has probably just remained stable. So in terms of imports from China, I think the management was clear in its transcript, 12 million tons have probably come through even now. And even the Indian prices at this point of time, 8 to 10% lower than the imported landed prices that we are probably witnessing. So there is every scope of increasing those prices at this point of time. And the price increase will also be substantiated by the fact that raw material prices have gone up substantially. But yes, I think the subsidiary performance for JSW Steel a little bit disappointing on that front. But value-added products is a significant value contributor to JSW Steel's fortune. So a little bit disappointing at this point of time. Again, I think like in Bharati's case, I think the price in terms of movement on the stock markets have moved up significantly. So on an EBITDA basis, again, I think one really needs to wait for significant declines. But I think the domestic consumption story still holds good for a lot of players like Tata Steel, JSW Steel, and that probably will augur well in terms of realizations going up and volumes holding up, which should give the leverage on their balance sheet. So again, I think wait for declines onto these counters, because I think the next 3-4 months would still be better, as I've said always, for steel companies in general.
Okay. Stay with us, Mayuresh. I think aviation is the next story that Neeraj would like to discuss. But let's go across to our research team and see which are the most interesting numbers that have been announced and are going to be announced. Well, our research team is here. I think to begin with, Yatin, what's the view on Airtel now coming out?
Actually, Somit would like to comment on it.
Yeah, so Bharti Airtel posted an operational beat in the second quarter. The revenue came in line with the analyst estimates, but EBITDA was 5% ahead of the analyst estimate. On the net profit side, it failed to beat the analyst estimates due to an exceptional loss of 179 crores in the second quarter. Now, average revenue per user, that is the key number for a telecom service provider, came in at 145 rupees, a tad below the analyst estimate of 146. On the data usage side, it has been growing now, and the data usage has jumped 1.6 times compared to the last quarter to 4 GB per customer per user. Now, coming to the liquidity position, the net debt to equity of net debt to EBITDA of Bharti Airtel stood at 2.91 times, while net debt on an absolute basis rose 4% compared to last quarter to 91,480 crore rupees. Now, this is on the back of higher spectrum payments and higher capital expenditure. Sticking to the capital expenditure part, in second quarter, capital expenditure stood at around 7,484 crore rupees, which is the highest in at least 8 years. Now, this is on the back of stepped up investment on data coverage and capacities. Now, in the second quarter, African business surprised the street. Now, African business contributes around 24% to the top line, but it formed a major part when it comes to the bottom line. Now, margins of the African business stood at around 32%, which is highest since September 2010. Now, this is on the back of cost control measures that the company has undertaken to make its African business more profitable. Also, after the result, CLSA came out with a big upgrade on Bharti Airtel. We'll talk about that on the later part of the show. Okay, now coming to Yatin, Hero Moto is the one you're watching out for.
Yeah. Hero Moto Corp, if you look at it this time, despite the fact that we can see a double-digit growth in the overall top line, the margin will remain under pressure, largely to do with the fact that we have the commodity costs increasing significantly for Hero Moto Corp when it comes to the steel and aluminum components. So on that front, we could see some bit of margin pressure. As far as the profits are concerned, we are expecting it to be close to 1,035 crores. Again, it will be only a 3% increase on a year-on-year basis. Of course, last time, same period, we saw some improvement in margin. That will not be the case this time. Of course, on a sequential basis, they will be able to maintain the overall margin. But apart from the earnings for Hero Moto Corp, the important thing to watch out for will be the management commentary on the rural demand, because we are looking at some green shoots which are happening there. Of course, we also will be watching for the management commentary on the export market ramp up, especially in South America, and also the kind of new launches and the current market share trends that the company is looking at.
Okay, and Agam, Tech Mahindra is the other number?
Yes, we are expecting a quiet quarter. So starting off with the earnings, when it comes to the top line, we're expecting about a 3% growth. Some expansion in margins can be expected, but profits are expected to decline by 6%. But this is essentially on account of lower other income. Otherwise, we're expecting a relatively operationally healthy quarter because of a lot of efficiencies coming in place. And we'll be watching out for Lightbridge Communication, whether or not we see revival. But on the whole, it could be a quiet quarter, at least from the top line, very much in line with its peers.
Okay, and Shraddha, what other stocks are you watching out for?
6 names today, Pradeep. Starting off with VRL Logistics, where they will, the board will meet on 3rd November to consider a buyback. That's one. Bharti Infratel, of course, will continue to remain in focus. Bharti Airtel yesterday confirmed that they may consider selling controlling stake in Bharti Airtel after having received interest from some global investors. So we will continue to see some action there. Centrum Capital has acquired First Strand's microfinance business in India. That's according to a TOI report. And you also have a Mint report which says that Schneider Electric has Schneider is a top bidder for L&T's electric and automation division, and that could be for about 15,000 crores. Now yesterday we saw 8% rally in Axis Bank on the back of reports which said that PE investor Bain Capital was looking to buy about 5% stake. Now today you have a Mint report which is saying that 3 investors, so Bain along with Singapore Wealth Sovereign Wealth Fund GIC and Canada Pension Board together will be buying as much as 10% stake. So we could continue to see some traction on Axis Bank. And you have Cyient on the back of bulk deals. Now, while Carlyle sold its entire 9.9% stake yesterday, the names of the buyers are interesting, and it mostly includes domestic mutual funds. So you have Birla Sun Life, which has bought about 1.3% stake, and you have 2 of Reliance Capital funds, which have bought about 2.5% stake. So all of these names to keep an eye out for, Pradeep.
Well, thanks, Shraddha, Yatin, Agam, and Somit for all these details. Mayuresh, IT sector, in fact, if you look at Mindtree, what would be your expectation? And interestingly, over the last few days, IT has kind of picked up. And among the heavyweights, if you see, TCS has been an outperformer over the last 1 week or so. What's your view really here?
No, so the sector, Pradeep, again, I think is going through its rough times. So what happens in terms of the second half, in terms of discretionary spending, specifically on BFSI, retail, I think that really is a dodgy question that IT companies still need to comprehend at this point of time. But again, I think I've been very, very selective here. So as Shraddha was mentioning, I think Cyient is something that I've been liking for a period of time. And clearly, if you look at Cyient's model per se, I think Rankson's probably is bottoming out at this point of time. You're probably looking at services business growing in excess of 15-16% odd. You're looking at the design-led manufacturing component of Cyient actually performing more in excess of 20% over the next 2 years. Again, I think with wage hikes largely gone for this year, the margin should more or less get maintained around the 13-14% mark. And again, the earnings outlook and trajectory looks very, very robust for this company. So any decline becomes a very good buying opportunity. Out of the large cap names, I think TCS has delivered in all parameters as per analyst expectations. The large parameters that one probably looks at in terms of utilization levels, in terms of how their execution patterns are, their client outlook, I think that gives a very encouraging sign at this point of time. So I think TCS is a clear route from our side. HCL Tech, again, I think is something that we'll continue to prefer over a longer period of time. I think the IMS and engineering has been doing wonders for them. And again, I think the expectations there over the next 2 years largely remain upbeat. So I think I'll remain very, very positive on these counters. But on the large cap names, I think on these 2 wait on declines, Cyient, one can really look at buying this stock in a staggered way over the next few weeks.
Okay, we've got some questions on our social as well, predominantly about a stock called Savaria Consumer, which has apparently hit 10 upper circuits after the results. And I saw the stock. It's a 22 rupee stock, but a market cap of 1,600 crores. We'll talk about that as well, but it's that time of the show. But we have to get you some technical recommendations before we get you Bloomberg Edge. So firstly, Mukesh Singh as well as Vishwesh Chauhan with their stock recommendations for the morning. Gentlemen, both of you, good morning. Thanks so much for joining in. Mukesh, we'll get to the index view in a bit. Stocks first, what are the 2 stock recommendations for the morning?
For the morning, our first is buy Adani Enterprise around 132.50. Stop is to be placed below 128.50, and target on the upside is seen at 145 in next 4-5 days. Second one is Jain Irrigation. It is to be bought around 102.50. Stop is to 9. And target on the upside is seen around 110 to 112 in next 4-5-6 days.
Okay, so these are 2 picks, Adani Enterprises and Jain Irrigation is what Mukesh likes. Vishwesh, what do you like today?
See, I think in yesterday's session, after a long time, we saw, a couple of stock moving higher and with a good amount of, data indications. So I think in a very shorter term, if trader is looking to take a punt on the market, then probably we would recommend capital first with a stop below 720 and for the target of 840. I think other than that, yesterday there was a super long addition in the key PIT. So with a stop of 146, this is a very good, short-term trade for the target of 164. Those are the two buys, on the markets right now.
Okay. So these are the stocks that Vishwesh really likes. KPIT Tech and LIC Housing are some of the bets that Vishwesh is really looking at today. But before we move ahead, Mukesh, looks like, going by SGX Nifty after kind of drifting down over last two sessions, Nifty will probably once again give us a gap up. What do you do on that gap up? Will you take a long position or rather look for exiting any long if you had?
Pradeep, for last 3 days, Nifty has been in a range of 10,385 to 10,310. So there was a bit of a profit booking kind of area developing over here. But if this SGX is to be believed, and if we are opening a gap up, and if we start seeing morning highs, by that I mean initial 15-20 minutes of highs start getting crossed subsequently in the day, then it's all go green signals for the target of 10,440. And eventually, the longer-term running flat pattern is projecting a target of 10,600.
Okay, so
because of this overhang of call put positions around 10,400, it has taken 3-4 days. But if we start with the gap, start crossing morning half-hour highs, then I think we are headed higher towards 10,440 at the least for the day.
Okay, so it's important to hold on to the early gains. That is what Mukesh is actually talking about. So one should wait before taking any initiating any fresh position in Nifty. On to our special segment, Bloomberg Edge, where Jayesh Khilnani tells us about a pattern that the Bloomberg terminal has thrown up on a stock. Jayesh, what is the stock you're looking at today?
Morning, Pradeep. I'm looking at India Bulls Real Estate, and this time around we are working with two indicators. So the trender indicator and candle sessions, another pattern that has got generated on the chart of India Bulls. Now let's have a look at how the trender actually works. It's a proprietary Bloomberg indicator which uses average true range as one of the key inputs for calculation. It helps you to generate buy and sell signals, wherein you follow the color to get those. So flip from red to green, it gives you a buy signal, and the other way around, a sell signal is generated. Now the other pattern that I was referring to is the candle sessions pattern. So it's a reversal indicator based on Japanese counting methodology. So the trend is established by comparing two consecutive candles, whether the first candle and the second candle, whether there's a higher high or a lower low. That's where your count is established, and potential reversals according to Bloomberg theory occur at candle session number 8, 10 or 13. So let's have a look at the chart of India Bulls Real Estate. Now this is the first time in 3 months nearly that the trender has turned positive, thereby indicating a buy signal. That is where the buy signal has come in. Yesterday's close price has been above this red line, and that's how you get your buy signal. The other two numbers that you're watching on the screen, the session number 1 and session 2, those are the candle sessions. So why this is number 2 is because the previous the high of this candle has been above this one, so that is how you have generated session number 2. And historically, whenever the candle sessions has established a pattern, we have seen session number 8 or 9 coming about. So looking forward, you can get gains for next 6 to 7 days odd.
Well, interesting, India Bulls Real Estate, and I think we spoke about this as well. Jayesh, thanks for putting this into perspective. There is an FNO trigger to this as well, because India Bulls Real Estate comes out of the FNO ban. And I think Navneet was speaking about this in yesterday's show. She was not completely sure, but she did believe that maybe the trading patterns show that India Bulls Real Estate could come out of the ban, and that could well provide a bit of an impetus to this stock in today's trade. Vishwesh, just a very quick word. If India Bulls Real Estate starts off a couple of percentage points higher, would you go out and buy it for a trade?
See, I think so, Neeraj, in my opinion, also the stock has been, trading in the range of 200, 215 for quite some time. It was not able to move about 220. Now that it has done so, in yesterday's session, it has moved out of FNO. I have a reason to believe that along with other real estate stock, this stock also has a potential to move higher till 250 level. So definitely it's a good indicator and pick up by Bloomberg Terminal.
Okay, Mayuresh, let's talk about some of the other results that came out. KPIT Tech, strong quarter. What happens here? It's following the line of mid-cap IT companies which are delivering good numbers. I think Pradeep spoke to you briefly about it, but KPIT in particular, if you track that one.
So strong set of numbers, Neeraj. And again, I think one must really understand that all these niche IT companies in the mid-cap space probably either have products or services which are very, very niche in nature. So in that sense, again, I think one really needs to understand how that profile will work. The second element also becomes the client concentration bit. So I think you've seen deals for most of these companies where a few clients actually withdraw, and that creates a significant bump in terms of the expectations on revenue visibility as well as execution going ahead. So as I said, I think strong set of numbers and uptick can be expected, but what I really like from the mid-cap IT pack is signed on declines in a very staggered manner.
Mayuresh, what's your call on PSU Bank, looking at the syndicate bank number? Right now, a simple way of looking at the banks probably is that banks with less than 10% NPA, and syndicate bank is one such bank, also SBI and Indian Bank. And there are banks which are above 20 or 25, like IDBI has really reached that mark. How do you really classify PSU banks, and are you buying into at least some of these banks like Indian Bank or SBI which have lower NPAs?
So the base, Pradeep, was obviously going to be very, very favorable for PSU banks. And as you've said, I think a lot of details have gone into upgrades and recoveries for these banks. The credit growth has not picked up significantly for the banking sector as a whole. I think this entire move, as and when it happens, and the manner in which it happens, obviously is going to be a very beneficial process over a longer period of time, because I think it alleviates a lot of issues related to provisioning and bad debts, and that probably brings credit costs down over a period of time, assuming the fact that credit growth also starts picking up gradually over the next few quarters. Having said that, again, I think out of the entire pedigree of banks that we are probably out of the PSU space, State Bank is something that I've continued to like. I think whatever has happened in terms of mergers, in terms of the subsidiary consolidation, the NPA recognition part, the watch list, I think a large element of that would probably be there in the balance sheet. The lumpiness and softness in numbers would continue, but again, from a valuation perspective as well as an earnings perspective, State Bank from the top tier names is something that I'll continue to like. And from the mid-cap universe, yes, Syndicate Bank did give a good set of numbers. A diversified portfolio is what the bank actually possesses at this point of time. So I think any sharp recovery that you probably see in the economy over the next few quarters, I think the uptick can be seen in those numbers. But Indian Bank is something where I'll keep a close watch on. I think this is something that I've liked, something which I've discussed. I think if you look at the GNPA pattern at around 7.65, the management wants to get it down to 5% over the next few quarters. Net NPAs, again, I think should be significantly lower. Capital adequacy remains significantly higher. So if you have a mapping done in terms of all PSU banks, I think it ranks right there on the top in terms of NPAs being lowest, the capital adequacy remaining the highest out of the mid-cap PSU universe. And the management commentary is indicating the fact that they're probably working out and resolving things to probably make things even better for the balance sheet. So valuation is extremely mouth-watering. So I think Indian Bank is something that I've liked and I'll continue to prefer from the mid-cap PSU levels.
The stocks which hit, few stocks which hit 52-week highs yesterday, Vakrangi Software was one. I think Sterlite Tech was in that basket as well. Let's just bring up these stocks. So Vakrangi, Sterlite Tech, a couple of very active names. KPIT after a 6% uptick yesterday could have an interesting move today. So let's wait and watch for that. The interesting one is Just Dial though. 2 days in a row, Just Dial has been up 6.5%. We all know about the rumor in the street. We don't really know whether delistings like that could happen or not. But Just Dial, the last 1 month, 26% this week has been a fabulous move for Just Dial as well. Can I, Mukesh, quick 20-second view on Just Dial if you can. Is there more steam? Can somebody go out and buy it?
I mean, I would wait for a dip around 430, 435 before initiating fresh longs, as the stock has run up from 400 to 470 in a matter of a couple of days. On the higher side, I'm expecting a move towards 510, 515. Week's
chart is the one which shows a really strong uptrend. Last 2 trading sessions, Just Dial has been up about 15% if I'm not wrong. Yeah, 7 days about 13%. So it's a big move. for this one. Okay, 30 seconds left for the pre-open rates to come in. I'm sure Pradeep will keep a keen eye out on the rupee as well. He's been talking about that for the last couple of days, and the BOE meeting could have some currency implications as well. So
should open strong.
Should open strong, the currency. Okay, so let's wait and watch for that, and let's wait and watch for the result reactions. But by and large, the rest of the Asian markets, a tick of green, a strong one at that. The SGX indicating 1/3%. So we'll start off higher. Let's wait and watch if we hold on to those levels or no. And clutch of names really to watch out for. Some result reactions that will be in focus. But here are the first rates. Muted for the Nifty, the Sensex showing 1/3%. I would reckon it'll be somewhere in between these two. Yeah, so these rates will stabilize. Let's give them some chance. Right now, very, very volatile and edgy. Let's bring up some specific stocks. Bharti Airtel as well as Interglobe Aviation could be in focus. By the way, SBI has cut the retail term deposit rates by 25 basis points across all tenures. So that's an interesting one. We'll talk about that too. But yeah, the result reactions thereof. Firstly, Interglobe Aviation, Bharti Airtel, and then a sea of mid-caps really, which could have an interesting move. I don't think it'll be a 10% move on Indigo. I think these pre-open rates, the first one should be just let go of. But 2 or 3 names, nevertheless, IIFL, KPIT, and maybe Sanofi India. IIFL Holdings, it's a strong quarter, yes. I don't know if it's a 20% quarter. KPIT more believable, 2.5%, 3%. And Sanofi India, good operational quarter. Yeah, could start off marginally higher. Pradeep, what else? I mean, SBI, rupee, lots in focus.
Yeah, so if you look at rupee, which has now opened at 64.69, that's a gap up of around 6 paisa. I don't know if the ease of doing business ranking has to do anything with this, but I'm sure it's because of the Bank of England's meeting tomorrow. What's really happening is sterling has gained vis-a-vis dollar, and when dollar weakens against other currencies, normally rupee tends to gain over dollar. So that's what is happening really. 64.65 now, that's a gain of 9 paise. It's good going so far. If you look at some of the stocks, let's see what happened to Syndicate Bank, which came out with good numbers, and also Interglobe Aviation. That was another interesting number that Neeraj has been talking about. Syndicate Bank is up 10% in today's trade. Well, I doubt if this will hold, but let's see. PSU banks are really in momentum, and Syndicate is the first call, I think, that came on our channel from the analyst. I'm not sure if that was Vishwesh or some other derivative analyst to give that on the day when PSU bank package was really announced. Can we look at Interglobe as well and see how it is doing now? Well, this is up 9% as well.
Yeah, the rates may come off a bit, but there are a bunch of big brokerage calls that have come in. Indigo has, or Interglobe Aviation has an uptake. I think Bharti Airtel is an uptake, but Sumit has picked up 2 or 3 that he thought were the best brokerage calls for the morning. Sumit, what are those?
So on the brokerages, first is IDFC Securities on Shankara Building. Now they have initiated coverage on the stock with an outperform rating and a target price of 1,786. Now Shankara has successfully evolved into an integrated home improvement player, and according to the brokerage, the implementation of GST will now accelerate shift to organized retail. Now Shankara is best positioned to tap the massive $70 billion home improvement market in India, according to the brokerage. Now they're expecting the company's revenue, EBITDA and net profit to grow at a compounded annual growth rate of 11%, 17% and 29% over FY17 to FY20. And over the same period, they're expecting the margins to improve by 100 basis points and the same store sales growth to average around 16%. A second we have is JP Morgan on Interglobe Aviation. Now they have assumed coverage on the stock with an overweight rating and a target price of 1,500, which is the highest among the foreign brokerages. Now the second quarter beat was driven by yield improvement and lower fuel cost, according to the brokerage. Now yield had increased, driven by revenue management and better market pricing. Now according to the brokerage, industry demand supply should remain favorable over the next few years, and which will result into higher load factors and better yields, and which would sustain the profitability for the company. Now on the cost side, they are saying that the cost performance remains solid and there is further scope of cost gap up compared to peers. Third, we have a CLSA on Bharti Airtel. Now they have upgraded the stock to buy rating from underperform and have hiked the target price to 637 from 430. Now they are saying that consolidation and data have revived long-term growth story for Bharti Airtel, and long-term growth story is expected to revive from financial year 2019. Now Bharti Airtel's EBITDA is expected to grow at a compounded annual growth rate of 6% over FY18 to FY21, and consolidation in India and Bharti Airtel's turnaround in African business will be reviving Bharti Airtel's long-term growth story going forward.
Thanks, Amit, for all these details. And Shankara, Buildcon is one interesting stock, and this is not the first positive or a buy report that we have seen on this one recently. Mayuresh, you have a view on this?
Looks positive for the company, and I remain positive. Largely, again, if you look at the business model, retail still contributes around 40 to 45 odd %, and as that proportion start increasing in terms of their contribution to the top line, I think the margin improvement can be gradually expected to go up as well. The margins probably remain in the range between 6.5, 7.5 odd %. But you look at the reported EPS for FY17 of 27-28 odd rupees. My own sense is that there can be a significant improvement coming through as more retail contributions start happening, as margin improvement starts happening, and as more diversification start happening across the key states that it operates out of. So yes, I think the stock probably is poised for a very reasonable amount of growth in terms of both top line and margin expansion, but the earnings expansion will be significantly higher because of the leverage on the balance sheet. So yes, remain positive on this stock.
By the way, okay, and we'll talk about a bunch of other companies as well, but it's time for a BloombergQuint exclusive. Shipping major Mercator Lines is looking to exit some of its non-core businesses. The company has begun talks to sell its stake in 2 coal mines held through its subsidiary Urja Holdings. Yatin Mota, who's spoken to an investment banker involved in the transaction, joins us with the details. Yatin, how much does Mercator Lines hope to make from the sale, and what will it do with the funds?
Thanks for that, Neeraj. And more importantly, two sources familiar to the transaction have indicated BloombergQuint that Mercator Lines is all set to sell its 2 location Indonesian coal mine operations for a consideration of close to $150 million. That is close to 1,000 crores. Now, what sources added and indicated that the entire deal proceeds from the transaction or the sale of the coal mining operations in Indonesia will be used to repay debt. Remember, we have Mercator Lines, which has debt of long-term debt of close to 1,400 odd crores. So a majority of their long-term debt will be repaid via this particular transaction. And more importantly, after this, Mercator Lines will be having only exposure to coal mines and the operations in Mozambique, wherein they will be developing a mine in Mozambique. So basically this is exiting only the coal mining operations in Indonesia. Of course, the businesses that will be left with Mercator Lines after the sale of this coal mining operation will be the core oil and gas segment operation, which is basically their oil exploration business. And also apart from that, one of the places in which they are trying to get more orders is the dredging segment. So it's basically selling off their most profitable business as of now. It is very important to see as to how the management justifies such a sale, given the fact that most of the profitability was coming, the cash flows were coming in from the coal mining operations in Indonesia. So it is very important to see how they do, or what is the kind of growth trajectory moving forward for their oil assets as well as their dredging business.
This should be interesting. Yatin, we've tried to connect with the management, but I presume they've still not gotten back to our queries. Yeah, so an email query that we sent to Mercator Lines management did not translate into some kind of response, but probably we'll try and get you their comments on this particular story from the management. Okay, that's the big BloombergQuint exclusive for the day, Mercator Lines. And I remember some conversation a couple of days or maybe last week about Baltic Dry having flared up as well. I think some of the shipping counters have had a good run too. This one, no different, but there are more things that play a part in Mercator Lines than just a Baltic Dry. That's probably for the other players. Mercator has a lot of other moving parts to it as well. Mayuresh, you heard Yatin's story as well. There is some tailwind to the space maybe. What do you do with the Mercator Lines?
No, Neeraj, it's outside our coverage universe, so not able to comment.
Okay, fair call. Any thoughts on shipping at large though, Mayuresh?
No, so I think it's a trend, right? So the Baltic Dry Index, as you're saying, I think it's a dynamics of supply demand, and even the Baltic Clean Tanker Index, I think it's a moment on how the crude prices move and how the VLCC rates are probably happening at this point of time. So there are different subsets within all these movements as well. The dry commodities and again the Chinese stocking phenomena as winter is nearing. I think you're probably going to see a lot of that happening over the next few months. But again, I think one must realize that this is a cyclical phenomena. I think a large element of the business still has lumpiness in it, specifically from the listed players, where the dead wettage tonnage still exists, but there is still oversupply in terms of ships coming through. And that oversupply will very well continue at least for the next 1 year, which will basically mean that the rates will remain suppressed, except for these intermittent time periods where you're probably going to see spikes happening, but that probably settled down after a few months.
So that's the call on shipping. Well, let me come back to my favorite PSU banking space, because Syndicate Bank has finally settled with gains of 10%. So it managed to hold on to those gains, but also UCO Bank has moved by 6%. Now this is one of those high NPA banks. Actually, you also look at Bank of India, Andhra Bank. So many banks are moving up. Even PNB among heavyweights. SBI should also remain in focus, because first we heard they have cut the MCLR rate by 5 basis points, but now also we have realized that the retail deposit rates have been reduced by 25 bips. So that should actually add to their margins, because deposit rates going down 5 times more, so to say, then the MCLR is really a good news for SBI. That could also be a reason why all the other banks, PSU banks, are moving up, because SBI is normally the market leader, and when SBI cuts, others simply follow. They also get a space to reduce their deposit rates. So probably all the other PSU banks will also cut deposit rates.
Let's wait and watch. By the way, just before we get to all you need to know, need to mark Bharti Airtel as well. The big boys settle with gains of 4.5. So this one will be a big mover on the index, presumably on open too, and could well last. Remember, I think multiple things at Frey. Operationally a strong quarter, even though ARPUs were low, but also this intent to sell Bharti Infratel. So difficult to figure out what could be working aside of the trend for Bharti Airtel. We'll ask Mayuresh about that. But this one will have a good start in trade. Speaking of good starts and speaking of all that you need to know to stay ahead in trade today, Bharti Airtel, as I was mentioning, Interglobe Aviation, Syndicate Bank, Swaraj Engines, IIFL are amongst some of the companies that have reported strong numbers post-market hours last evening.
And also on the other hand, JSW Steel, DV's Labs, Syntex Plastics, EIH Associates Hotels have reported weak numbers. So these stocks may actually lose ground in today's trade. Well, not quite if you look at JSW.
Yeah. Watching out for Hero MotoCorp, Tech Mahindra, Godrej Consumer Products and Hexaware earnings in the session today.
Bharti Airtel is mulling sale of controlling stake in Bharti Infratel. So both these stocks will remain in focus. Bharti Airtel, as we see, has given a strong opening.
New India Assurance Company IPO opens today. Issue price at 770 to 800 rupees a share.
And Cyient is in focus as First Carlyle exits. Buyers include Birla Mutual Fund, Reliance Capital, UBS and Fidelity.
Well, that's a packed day of trade. Good one, really. Just before we get into Mukesh and Vishwesh for their top calls, Mayuresh, a quick 30-second view on Bharti Airtel. 4.5% higher. You've seen the numbers. You've seen their intent to sell the controlling stake in Infratel, maybe to invest more or cut down debt, whatever it may be. What's your call on the stock?
No, so as I said, I think the whole rating continues, Niraj, and the positiveness emerges from the fact that the industry is getting consolidated. At the same time, I think even though debt levels are going up and ARPUs are going down, I think it's a matter of time over the next few quarters that the trend starts reversing, and the deleveraging on the balance sheet is something that the incumbents are clearly cognizant of. So whatever happens in terms of selling off or stake sales of the subsidiaries or the tower businesses and so on and so forth will deleverage balance sheet, though the operating costs remain high. So I think a whole rating clearly continues on Bharti Airtel.
Mukesh, what's your call on Interglobe Aviation or anything else if you like in aviation space?
I don't think Mukesh could hear us, but I think we just have enough time now for taking the top call. Mukesh, actually Pradeep was asking you about Interglobe Aviation. Quick 20-second call, Mukesh, on Interglobe Aviation.
Yeah, this Indigo 13, 20, 25 kind of area. Those who have bought should keep a stop loss around 12.10.
Okay, that's the stop loss. Niraj, I heard you talking about last month's, flyers data, but I think even October number should be very good because it had Diwali vacation.
Yeah, so last month wasn't that greatest, but let's see if October shows a bit of a turnaround. Hopefully this October, November, December quarter could have it. But 1 minute to go. Let's nail it down to that one top trading idea for the day. Vishwesh, to you first. Quick 20 seconds. Your top trading call for this morning.
See, like I mentioned, CAPF and Capital, KPIT, those are the two stocks I would look to buy.
If you had to choose one,
index, I think we are around 10,400. The premium of a...
Vishwesh, I just have time for one call right now, very close to market open. One top call for the morning.
KPIT.
Okay.
KPIT target 164, stop loss 146.
KPIT target 164 is Vishwesh Chauhan's top call. Mukesh, quick call. Your top call for the morning.
It has to be Adani Enterprise around 132.50, stop 128.50, target 145.
Okay, so Adani Enterprise, KPIT are the top two calls. We'll ask Vishwesh about his index call just post market open. But the market about to kickstart trade, and we'll have a start in the green. About 1/3% is what the SGX and the Nifty pre-open rates were indicating. So we'll start off around those levels. 0.5% higher now, 10387 for the Nifty. The Nifty Bank is participating. Sensex up a healthy 150 points. I would reckon that the mid caps and the small caps have started off well too. Remember, they did reasonably well in yesterday's trade too. I would presume that the broader market is not starting off on a poor note. So the market breadth positive. We're starting off on a good note. Let's bring up the Nifty heat map and try and show you. Fair bit of green, I'm presuming. Yes, hardly any red. That's the key thing. So you're getting the flavor. A lot of green, very little red on the screen in today's trade. Now, let's focus on individual names. Bharti Airtel, State Bank of India, Interglobe Aviation. Those are three names that I just want to pull up on the giant wall. Bharti Airtel, 4% higher. Actually, Infratel too should come up on your screen. But big move for Bharti Airtel today. A strong move at that. Bharti Infratel about a percentage point higher. Really good going there. And State Bank of India should come up on your screen. They've cut the tenor deposit rates by 25 bips. About a couple of percentage points higher, 311 and counting. So good move there for State Bank of India in the session today. But what about individual names that are reacting to numbers or the news that have come out post-market close? So Interglobe Aviation, a strong quarter two, and not really the 10% move, but still about 1.5% higher. So it's a good start to Indigo. Let's see if it continues doing well. Earnings reactions being seen for IIFL too after a strong move yesterday. Up another 5%. That steady quarter for IIFL, 25-30 odd% growth across parameters, and that's showing in the way the stock has done well. Operationally, it was a very, very strong quarter for both of these names. So VST about 4.5% higher. Sanofi, the market really liked the operational beat that they've shown, up about 12.5% in trade today. So good going for this one. I'm talking about a bunch of other stocks, but just one that I want to mark. And KPIT, the constant currency revenue growth was at 4.3%. About 1% higher. This is IT, so it doesn't really move with that much of flair, but a good quarter nevertheless, and it's showing in the stock. Pradeep, what else are you spotting?
Dredging Corporation, interestingly, is up 11% in today's trade. You also have Syndicate Bank after the number. This one has managed to hold on to the early gains. It's up roughly 10% so far. Sugar stocks have moved up. Sri Renuka is up 6%. You have Bajaj Hindustan gaining around 5%. So these two are really leading it. Dabur India, the second day of gain after yesterday's number. Dabur has moved up by 4% in today's trade. Yesterday also we saw the stock moving up 3 to 4% after the numbers came out. VRL Logistics is a key gainer, up around 5%. And Praj Industries has also moved in tandem with the sugar companies. Inox Leisure, another stock that we have been watching out since yesterday, has up 3.5% in today's trade. And you have both the small infrastructure stocks, small in terms of ticket size, GMR and GVK, both moving up by around 4% in early trades today. PSU banks are buzzing, but interestingly, you have stocks like IOB also moving up by 3% which is in that bracket of very high NPA banks, really 20% plus 25% nearly is the number on IOB, but that has also moved up.
Yeah, but very interesting, these few stocks that are moving up. I just want to mark GVK Power. After a really long time, it is not locked on an upper circuit. It's up 3.5%, but not locked on an upper circuit. Actually, it's given up some of the gains as well. Okay, so yeah, trees don't grow to the sky. This one is no different after a really, really big move. Just kind of tempering its gains. Okay, quick thoughts here. Vishwesh, to you first. If you would buy the index, and a very quick call on Praj Industries, Vishwesh.
See, I think Praj definitely looks good. In my opinion, Praj, the way, it has bottomed out in a very shorter term, I think the stock has a potential to move higher till 99 level also. So yesterday, trade itself a very heavy volume of 55 lakhs, which is, in a recent time, sort of unusual. I think stock is definitely a good buy even at this current level. I would suggest with a stop below 78, one can look to buy. In today itself, you can see a target of 85 and 89.
Vishwesh, any PSU bank you will go long on?
I remember, Pradeep, you've been talking about a syndicate bank, and just before that PSU, capitalization things announced, we were, recommending a PNB and a syndicate bank. So now, I think in a very shorter term, if I had to pick a one, PSU bank, then that would be a Oriental Bank of Commerce. The previous rise in the Oriental Bank of Commerce from the, 2016 lows is an impulse, and right at a 119 has formed a bottom. So I think the stock has a potential to move higher to 230 level also. So if I'm a positional trader and would like to hold it for a couple of quarters, maybe 3-4 quarters, then probably with a stop of 119, I would buy Oriental Bank of Commerce, and it may give me that positive alpha.
Okay, Mayuresh, before we thank you, Dabur, one last thought here. It's moved up substantially after its numbers. What would you do here?
So yes, I think good set of numbers, Niraj, but the whole rating continues. But what you really like is Imami from the entire FMCG pack from a bottom-up approach. What you probably saw in terms of numbers, a tad bit disappointing on the bottom line, but our own sense is that volume growth should stabilize over the next few quarters. The input cost inflation that you've probably witnessed, a certain pass-through should happen because the moats that they've got, the leadership positions that they've got, they have the flexibility to probably pass through in a very staggered manner on that front. And that probably gives them the added edge in terms of earnings as well as valuations as growth, both in terms of volume and realization starts picking up. So yes, I think Dabur remains a hold, but I think Imami is something that we'll like on declines.
Okay, gentlemen, all of you, thank you so much. Mukesh, Vishwesh, as well as Mayuresh for joining us today and giving us your thoughts. Much appreciate you taking the time out. The index perched pretty, about 214 points up for the Sensex, the Nifty too, close to 2/3% in a green. Good time to get in Mr. U.R. Bhat, Managing Director at Dalton Capital Advisors, joins us right now on the show. Mr. Bhat, thanks so much for joining in. When we kick-started our platform, you were there on day one. Did you anticipate that we would be close to this 10,400 mark in a 1 month's time? It's been good going. Can this last?
Really, I think I never expected it will go to this level, given the fact that valuations were stretched then and valuations are even more stretched now. But valuation is probably not a very good argument when there are flows, there are strong, robust flows as we have seen.
And domestic ones at that.
And domestic ones at that, even though the FIs continue to be, sellers, maybe marginal sellers. So therefore, I think it is just the good news that keeps coming. Yesterday was this news about ease of doing business. I think that is probably a reaction to that. But otherwise, I think the old arguments about valuation, the old arguments about slowdown and all these things continue. But I think the one redeeming feature, if you really see, is the sort of temperature in North Korea has sort of come down a bit. So that was a big concern for quite some time, and now it looks like as if diplomacy is being given a chance, especially after this accident that you heard about yesterday. So I think that is one thing that is probably giving some solace to the market.
What with Trump's visit to Asia as well should be interesting times, quite frankly. Mr. Bhat, for the longest time I know, while you have a pulse on everything, you have a really good pulse on what's happening with the PSU banking space. SBI today has reduced this tenor rates as well, 25 bips, and this whole recap move. Now, I know the jury split out there on both sides. Which side of the camp are you and why? From a market's perspective?
Well, given the serious problems the public sector banking system had, I think this is the only way out. I don't think those who are criticizing this really don't have any other alternatives. So this is the only way it can be sorted out. And I think that's the right thing to do. And the quantum also is something that what the market wanted, and the quantum also is roughly in line with what was required. But I think the implementation will probably take the best part of 2 years. It is not so much front-loaded as probably the market would have liked it to be. And the stock price movement suggests that everything is done, sealed and delivered. It is not so. It will take some more time. We still have this quarter results of most public sector banks yet to come. I think there'll be probably some more grief there. So therefore, I think all this celebration about this package will probably get tempered a bit.
It's already tempered.
Yeah.
So my question is, does this tempering down a bit from those crazy levels of 345 for SBI to 311 currently, does this provide an opportunity for a long-term investor to try and contemplate a serious bet?
For a long-term investor, if I mean the entry point minus 5% may not matter so much. So I think that is fine. But otherwise, if you really see the NCLT issues and stuff like that, lots more of companies being referred to NCLT. So therefore, a lot more provisioning requirements. All this, I think, will haunt these public sector banks for the next couple of quarters. And so therefore, I think there is probably going to be less exuberance in that as we go along. Till, of course, actual money starts flowing in. I think we still really, the government is still thinking about how to do it, whether it's going to do it directly or through some other method. So I think all these issues need to be clarified, and the timeline for how the money is going to come, how is the recapitalization going to happen. I think what the government has announced is just the principle.
No, but if that is the problem, isn't it a better idea to buy maybe some 4 or 5 banks, PSU banks that you like, because the total quantum is fixed.
Yeah.
Now only the allocation is to be decided. So
Correct.
if PNB doesn't get it, maybe IOB gets it. So you can safely buy a bunch of stocks.
Yeah, you can buy a basket. I mean, as I said, if you are a long-term investor, if you've got a 3-year view, I think that is one of the best bets. But if you want to time it, I think probably you'll have a better timing possible over the next quarter or so.
Okay. If I take it forward to where Niraj really started off, market has done better than our expectation because sectors like PSU banking have moved up.
Correct.
Now also telecom, another written off sector, is doing quite well. What's your view there? Are you buying?
Well, I think the shakeout is yet to happen. There is certainly some more consolidation that is required, and that is happening. I think there is exuberance on account of some corporate action and stuff like that. But otherwise, I think they still don't have pricing power. And I mean, I think still you have not heard the last of destructive competition. So I think that will continue. There will be probably just a couple of 3 or 4 survivors, and they will have a long way to go to make some real money.
So is it too early to buy into those expected survivors?
I think so. I think there is further pain that you can write down on a piece of paper. I think there will be certainly a lot more pain before there is going to be good news from there.
Are you enthused by 2 pockets which have shown good numbers, or maybe I'm too early in saying that the aviation pocket will show good numbers because it's only Interglobe that has come out till now. But is the tide turning there? Aviation?
Well, I think the traffic is very good. I think the load factors are very good. But I think again there will be a huge shakeout. And I mean, not everybody will be a survivor there.
But there are only 3 players listed.
There are virtually 3 players.
Yeah. Would you believe any of those will get done away with? I mean,
but I think there would be certainly some change in terms of market share. I think some of them might do much better than the others. And I think that is what you're seeing over the last few days, the last few quarters. And I think that sector with the sort of a limited oligopoly, as you can call it, I think is certainly seeing better times than we have seen.
Will those continue?
Yeah.
Will those continue? Can they continue these better times?
Well, I think the traffic flow continues. I think aviation, I mean, flying is becoming more and more affordable. So therefore, you will certainly see the load factors will improve. But I think there would be a big supply in terms of capacity building. So that is the time there would be some pain. Probably that is another few quarters ahead.
Okay.
But right now, I think these companies are doing well.
Must mark Dabur. Just pull up that stock on your screen. That one is up now 6%. And I think it went up a little bit post the numbers yesterday as well. So cumulatively, I think it's gained about 10-odd%. Nothing that dramatically special about the numbers. The management commentary though yesterday was reasonably confident, if you will, about what happens in the quarters ahead.
Something interesting, I found in that commentary was that management believes that Patanjali's rise is actually favorable to them because market is shifting towards herbal products, and that is where they have a stronghold.
Yeah. So what do you anticipate some of these consumers to do? I know you can't talk specific stocks, but companies in this whole the Dabur variety, the Daburs, Colgates, and maybe Patanjali is not listed, so on. But I'm not comparing strictly an ITC or an HUL with these.
Yeah.
The second tier players, if you will.
Correct.
What do you do here?
Well, I think they are gaining market share, no doubt about it. And I mean, all this, whatever Patanjali has sort of shown that there is a lot of interest in the herbal variety of FMCG goods. I think that is something that everybody is riding on that bandwagon. And if you really see, a lot of us were talking about slowdown and also GST impact and all that. But if you see the FMCG sort of numbers, forget about top line growth, even volume growth is there. So therefore, I think it is these smaller companies which have managed to weather this problem of GST quite well. And so therefore, that is why I think the market is reacting favorably in their favor. Yeah.
Okay. The surprise this quarter, and it's a very small sector, Mr. Bhat, so I don't know how closely you looked at it also, but the exhibition space, everybody wrote off the quarter saying that there are no big releases, plus the fact that by and large, the footfalls haven't been that great, and the F&B revenues will get impacted. But PVR didn't come up with a terrible quarter. Inox came up with a splendid quarter, and it's showing in the way the stocks are reacting to. Any thoughts out here? It's a very small space.
Well, I have not watched this space.
You haven't watched this space. Fair call. Leave that out. Smaller agri-dominated pockets. Sugar is on a bit of a flare. Tea, coffee, we haven't spoken about for a while now, but suddenly seeing some of the stocks moving around. Any thoughts here?
Yeah, especially I think sugar companies continue to do well. I think the sort of pricing that they are able to enjoy, that seems to be, I mean, at least those who are actually having good extraction rates and have sort of put their balance sheets in order, they are having a good time. And I think it looks like as if even the current, the next or the current sugar year is also going to be as good as the previous one, at least among the top few. And so therefore I think they will continue to do well, because till now it was always seen as a seasonal play, one-year play. But I think they are continuing to do well for the last couple of years now. So therefore I think there will be at least some of them who will become investor favorites and will probably get valued accordingly.
We talked about PSU banking, but you know, this entire effort of pump priming the economy and capitalization is probably just a part of it. You also have Bharatmala. How do you really intend to play? If you think this story can be played for next few years, will you buy into companies like L&T, or what do you do?
Well, I think all this, if it has to come to fruition, I think these are the companies which will certainly make hay out of this. Whether it's the construction company, the road construction companies, or the cement companies, or the industrial equipment companies. These are the companies which will certainly get to do very well. There is a huge opportunity there, and they were exactly the companies which probably bore the brunt of the slowdown over the last couple of years. So I think there is a turnaround in these subsectors, and I think it's worth playing those sectors.
Okay. Final question from my end, Mr. Bhat. If I scan through pockets of outperformance at the broader end of the spectrum, aside of what certain aviation companies have done, and aside of what, well, some of the obvious suspects have done, there has been a rise in two pockets which are, in a manner of speaking, economy facing. One is cap good companies, and they've done reasonably well in pockets, the likes of Thermax, etc. But to the big surprise, despite low sales, reported sales, is real estate. What does one do here? Yesterday, DLF and the others were active. The last 2 or 3 odd months, we've seen some of the other stronger players, the Oberoi Realties, Marathon NextGens of the world, do really, really well. Are you fishing around in this pocket at all? And well, why or why not?
No, I think the issue is the high-end realty, I mean, those who sell the high-end realty in the residential space, they don't seem to be having a great time in terms of sales. I think there is a lot of resistance as far as their offerings are concerned. People are holding back to buying the high-end real estate, especially on the residential front. So therefore, I mean, there might certainly be the expectations were probably worse than what the reality was. So therefore, there might be some relief here and there. But otherwise, I think for the foreseeable future, at least for the next couple of quarters, it doesn't look like I think the high-end residential market is going to really throw a lot of positive surprises for us.
Well, you know, one significant story that we have seen across several mid-cap companies over the last few days when we were analyzing the results, these managements have come out and told us that they have benefited by what Chinese government has done in terms of reducing the capacity in order to control pollution. So there are chemical companies, you have even, you know, companies like HEG, they have benefited. These have already become multi-baggers. How do you really, you know, project what Chinese government will do next, and what do you really do with these companies?
Well, one should really look at it in terms of, you know, some sort of continuum there, because it cannot be, you know, these things cannot be done in fit and starts. In fits. So therefore, I assume that, I mean, even the metal companies have been big gainers of this. So therefore, I think assuming that that is a policy change in China, so I think this is something that probably there may still be some more steam left. I mean, there is a lot of capacity out there which can get activated reasonably fast. So therefore, one needs to be always conscious of this. But for the present, I think things seem to be going well for them.
Okay, Mr. Bhat, lastly, if you were to be placing your most bullish call right now, and I'm asking you for a bullish call because you at the start of the conversation mentioned that you thought valuations were a bit stretched. So at these valuations, if you were to bet on one basket from a 12-month perspective, what is your top bet?
Maybe slightly more than 12 months. Public sector banks, I think, is the one that's worth betting. As I said, there might be there might be better entry points, but still, I think over the 2-year period, I think they will be multi-baggers.
And within that PSU basket, larger ones or the mid-sized ones?
Yes, the larger ones, probably they will be the acquirers, and they are the ones who are probably going to get more capital, and also they probably don't require as much capital as the smaller ones.
Can I ask you whether you would bet on the largest one? I know you don't talk on stocks now, but I'll just refrain.
Well, I think there are others.
There are others. Okay, there are others.
But
also.
then how do you create space for this? I mean, what would you really reduce? Will you reduce on private sector banks, NBFCs, or anything else?
Well, probably NBFCs and private sector banks have had their have done their bit. So therefore, there is some reallocation within the space, or even by getting out of something else. Maybe IT is not as good as probably people thought, because they are really, the growth numbers are low single-digit numbers, and probably valuation it doesn't reflect that yet. So therefore, there might be some reallocation possible there.
Let's wait and watch. Thanks a lot to Mr. Bhat for joining us today and giving us that perspective. Well, the index is perched at the highest point of the day, 266 points up for the Sensex. The Nifty too following suits with about 72 odd points. And the Nifty Bank is giving company, by the way, 1.2% higher for the Nifty Bank. So it's going all strong for the markets. Specific stocks have done well. IIFL Holdings post the numbers is looking reasonably okay. We chat with the management on the other side. Stay tuned to BloombergQuint.
Are we live?
Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
Business news, we're news for business people.
It's a very special series that we are trying to get to our viewers. Gentlemen, needs no introduction. Kenneth Andrade joining us on our special series, Alpha Moguls.
We look for business opportunities which exist on the ground with low capacity utilization. An industry which is not really in the pink of its health. Businesses which are reasonably growing slowly and consolidating. And hopefully at that point in time, valuations are in our favor. We need to compound earnings, and valuations have also to step up. So you get higher earnings plus you get higher valuations, and your outcome is a compounding of capital.
right, welcome back to Indian Open.
Yes, indeed. And we're talking about earnings on a day when the market is doing really well. IIFL has posted a healthy set of numbers for the September quarter with profits seeing a jump of 40%. Steady state as most people would call it as well, because they've done this now for a few quarters. But to discuss the key highlights of the quarter gone by and the road ahead for the company, joining us on our studio is Group Chief Financial Officer Prabodh Agrawal. Good having you, Prabodh. Thanks so much for joining in. Congratulations on a good quarter. Is this more a continuation of what you guys have been doing, or has something stood out this quarter for you?
Absolutely. You know, I think our performance has been quite steady over the last few quarters. You know, all three businesses have been doing well, which is NBFC, Wealth and Asset Management, and Capital Market. I would say that the environment is pretty good for companies like us in the financial services business, because you know, because of course, you know, the PSUs have withdrawn from the credit market. The availability of fund is pretty good. Our borrowing costs have been dropping. The credit demand is pretty strong for, you know, the set of customers that we are catering to, particularly in the retail segment. So I think it's a great environment, and the same shows in our results in this quarter as it has shown in the previous quarters as well.
Yeah. Okay, so let's talk about which amongst the segments are you most bullish on? Because if I look at your results, almost everything is shown some bit of a growth this quarter, and I think the quarter before the last one, almost all of your segments showed some key growth numbers. What is growing the fastest? What is likely to grow the strongest over the course of the next 3 or 4 quarters?
Okay, so what has grown the fastest is the Wealth and Asset Management, which is our private banking.
Yes.
As you would be knowing, we are among the largest private bankers in India right now.
Yes.
Our assets under management are close to 1,33,000 crores, and assets have grown by 47% YOY in this quarter. So that is the, you know, I would say the fastest growing and perhaps the most profitable business for us. And there the prospects look good. You know, a lot of wealth is still not professionally managed. The amount of wealth creation in the economy is very high, and therefore, you know, we think that we have, you know, the outlook looks pretty good. We cater to about 10,000 HNI customers. We continue to add to our relationship managers. In this quarter, we added about 30 RMs. Given that we are now among the largest private banking platform, now we're getting very good people from, you know, some of the strongest franchisees in India, including the MNC franchises. And so therefore, you know, these people bring new relationships. They will add to our asset growth in future.
What are the margins like in this business?
Okay, so our margins in the last quarter were close to 91 basis points. So on this entire 1,33,000 crore,
you earn about 1%.
We earn about 1%.
And that's competitive across the industry?
Now the industry, you know, the disclosure levels vary. But, you know, if I quote from one of the MNC brokers which covers us, they have done a study across the industry, and they feel that our margins are...
and this is sustainable as you keep adding clients? Because I would imagine ticket sizes start going down, right? No?
No, see, in case of HNI, what happens is that if you look at today, as I said, 10,000 families and 1,33,000 crores. So it's roughly about 13 crore per family, it's about $2 million. But then it's a 80-20 rule. So about 2,000 families contribute to about 80% of the wealth. So if I look at those 2,000 families and they contribute to something like about 45-50 crore each. So it may not necessarily be that, you know, the ticket size will reduce going forward. We have maintained this margin over the last 3 or 4 years.
So you expect that?
We believe that, you know, this kind of margin is sustainable.
The net new money inflow into the wealth management business on a quarter-on-quarter basis, that came off this quarter.
Yeah, that was lower in this quarter. We garnered close to 4,000 crores in this quarter. Last quarter was about 11,000 crore. This would vary. Quarter to quarter, this would vary. But roughly, if you look at in the first half, we have garnered new money of 15,000 crores. We believe that run rate is possible. So this is, and then in addition to that, we have the market appreciation and the exchange rate fluctuation. So, but yes, net new money, that will vary from quarter to quarter.
Okay, the lending business net interest margins, I reckon, expanded a bit on a YOY basis. But by and large, a lot of people would argue that over the course of the next 12 months, the cost of funds is not necessarily likely to come down. In fact, the Goldman Sachs note that came out mentioned last time that in all probability we could see lending rates, or rather the rates, go up in a big way as well. How does this impact your business?
So if you look at today, our average borrowing cost is about 8.5%. our average borrowing costs have dropped by 110 basis point YY, about 12 basis point Q1Q. Incrementally, now we are borrowing at sub 8%. So there is another, say, I would say 50 to 60 basis point fall, which will happen because my incremental borrowing cost is less than my average borrowing cost. I believe that there is, interest rates have not yet bottomed, that's our view. And we believe there is probably another 25 to 50 basis point rate cut, which will happen in the next few months. Having said that, what is happening is it's also the mix of borrowings. So earlier we were largely dependent on bank borrowings. So we used to borrow from banks at their MCLR. Currently the MCLR for most banks is around 8.1, 8.2%. But now what we are seeing is that the market borrowings, that is borrowings through NCDs, is becoming cheaper. So obviously our mix will change towards more market borrowings, and that has the potential to further bring down our cost of funds in the coming quarters.
On the growth side in the NBFC space, you know, I think one concern we keep asking in all of the lenders in this highly competitive, high growth industry is how worried are you about asset quality as you see a continuous rise in auto loans, personal loans. You said that even SME loans, working capital loans have been a big growth area for you. What's the outlook there?
So in terms of growth outlook, see, we are a diversified NBFC, but our focus areas are home loan and SME loans.
So home loans fairly secure, I would imagine, because it's you know, all mortgaged and secured and all of that.
Yes.
But SME loans?
So SME loans are unsecured loans. The yields are higher. The SME loans, typically the yields would be about 18-19%. And that factors in a reasonable level of...
So what is the NPA quality, especially on just that book?
So it's currently it's a new book for us. So it is not yet fully seasoned.
How large is that book in proportion to your entire lending book?
It's about 6% of my total book. My total book is about 23,000 crores.
Okay.
But here we have factored in a normalized loss ratio of between 2 to 3%. So we expect that kind of a loss to happen.
Okay.
And but given the high yield, that will be covered up. And here, see, the thing is that we believe that a lot of our apprehension is there associated with unsecured lending and with SME lending and all that. But we believe that this is a largely unpenetrated and sort of there is a huge potential because these SMEs that we're talking about.
Who's the quality of borrower? Like what is the profile of borrowers that you're?
So the profile of borrowers is especially if you look at these small shopkeepers. You go to any town or city in India, you see hundreds and thousands of shopkeepers, right? Do you ever wonder, who provides access to this credit to these guys? Nobody provides them. They have very poor access to credit because of various reasons. The papers may not be in place, bank account may not be in place, the title may not be in place, they have had historical bad experience dealing with PSU banks or other banks.
But don't you have the same KYC requirements?
So, of course, now the thing is that the KYC requirements are there, and we do eKYC has made things very difficult, where 92% of our KYC is done through Aadhaar-based eKYC. We use credit scoring a lot. So, based on the some credit scores that we develop.
These are people who have credit scores?
So, of course, they would have, they would have. So, the thing is that, if they do not have a CIBIL score, that's our own credit score that we use to assess, whether to give credit or not. Based on the fact that, the kind of turnover, the turnover growth, whether he has, how long he has been doing the business, does he have ownership of that property, does he have any other property, does he own his own home, etc. There are several questions that we ask. Based on that, we have our own credit scorecard. Based on that, we can give him an instant credit approval.
So what's the rate of delinquency in this book?
Current,
I mean, it's a very small part of your overall book,
but
so I would not stress too much on it.
2 to
3%.
Yeah, 2 to 3% is what we are expecting.
In comparison to what your net NPA level?
Yes, compared to that, our net NPA level is 1%. And our delinquency in home loan would be, say, 0.5%.
Yeah, well, that's traditionally one of the safest places, so yeah. Interesting.
Okay, well, I have one last question, Prabodh. I think most notes are asking about what's the sustainability of growth that you could see across your lending segments over the next 12 months? How would you respond to that?
See, I would say that, if you look at all the ingredients for us to grow at a healthy rate are there. We have been typically growing at 25 to 30%. We believe that kind of growth is sustainable. Given the fact that our capital adequacy is very high, our tier 1 CAR is 17%, our cost of fund is very competitive, Our distribution reach is very high. We have about 1,100 odd branches across India. We have multiple products. So given all that, I believe that that kind of growth is sustainable.
All right, it's looking good for the next few quarters, as you seem to be pointing out, in both your key businesses, wealth management and in NBFC.
Thank you.
All right. Prabodh, thank you so much for coming in this morning and talking us through IIFL. We're moving on now to mid-cap IT.
Yes, indeed, because that was one pocket that we thought could actually be doing, is actually performing much better than maybe what the larger ones are saying, putting out, because the future of technology lies in digital and cloud, automation and artificial intelligence, and maybe the mid-cap companies more nimble, more adept at moving around and not heavily dependent on the traditional verticals. So let's talk about all of that and more with two eminent experts. Sudin Apte, Principal Analyst and CEO at Offshore Insights, as well as Prabal Roy, former CFO at Polaris. Gentlemen, both of you, thanks so much for joining in. Mr. Roy, let me start off this conversation with you. That one standout feature across mid-cap IT, save for an exception or two, has been that their revenue growth and their bottom line performance has been much more consistent than what the large cap IT stocks have done, maybe over the last couple of quarters. Why would this be happening, you think?
Hi, Nirav. Good morning. Well, it is happening for a host of reasons, but I don't think really, Niraj, it's a question of mid-cap versus large cap. And I'll tell you what I mean.
I think we seem to have a slightly patchy line. We'll try and patch that. But Sudin, if I can pose that same question to you. I think Mr. Prabal Roy is saying it's not a question of mid-cap versus large cap. While he was trying to explain that, and we'll get to him in a bit. But what are your thoughts here?
I think a couple of points. I'm actually still little away from saying that it's a trend or established, fact that mid-cap is doing better than some of the larger companies. Yes, last 1 or 2 quarters, and especially last quarter, we have seen select mid-cap companies doing better. 2 or 3 reasons. Point number one, and I think maybe that's what Prabal was trying to say. Point number one, I think as the requirement of client changes, there was a requirement for Indian IT companies to transform themselves. So smaller and mid-sized companies possibly are easier to transform than transforming Infosys, Wipro, TCS, etc. That's point number one. Point number two, it's a fact of life that last few quarters we are seeing more activity by mid-sized companies compared to large companies, primarily because if you look at TCS, Infosys especially, and to some extent Cognizant, there are still some unsettled organizational issues which is keeping these companies busy inside. There has been a little bit of an attrition on the sales front side. So all of those reasons made mid-tier companies a little bit active on account. But that may be a short-term trend. Point number three, specialization plays a bigger role, and building specialization in mid-sized companies is relatively easier than some of the larger companies. Point number four, the current quarter, which is the second quarter or third quarter for American companies, those 2 quarters are relatively always better because new budgets have kicked in. So that can be another reason why we are seeing some of the increase in performance, especially top line.
Yeah, Sudin, I have a slightly broader looking question. I think typically for the last 2 decades, as we've seen IT services grow in India, clients were picking IT vendors based on their scale, the number of people they had on the bench, the ability to do large size contracts. That seemed to be the offshore model. When it comes to being able to give out digital contracts, what is it that clients are looking for? And is that skill set or that talent, does that reside in some of the larger companies that have access to better talent, or does that reside in some of the smaller companies that are more nimble on their feet?
Sure, that's a good question actually. When things have moved from traditional ADM infrastructure type of services to more of digital, whether it's new content, new pervasive computing, etc. I think 3 or 4 things which have evolved, which are very different than traditional IT services model. Point number one is very deeper understanding of domain, and by domain I don't mean technology or just a broader level vertical, but business process process or even a sub-process level understanding. One need to know really how a retail works, how they do merchandise and things like that. Similar for mortgage, credit card, financial services, healthcare. The understanding of business processes is extremely important. Point number two, you need to have an ability, obviously technology-led ability, to transform those processes to get a different experience for client. So your ability to deploy those digital solutions in an effective way has become far more important. Point number three, a lot of companies are saying that show us something which is less risky. ADM projects typically, or deploying a large package app, are typically risky in terms of on time, on budget. So they may get delayed, they may not exactly meet the requirement. And compared to that, if you have an IP-led solution, your ability to deploy and your ability to match the client requirement is much better, and the predictability of solution is much higher. Now, a lot of these solutions, one can argue just by a number of people working on those things, or the inventory of assets in those companies. I think tier 1 companies do have those assets and those people and those capabilities, but they have larger challenges of ADM and infrastructure and testing to defend. Point one. Point two, I think, they're also busy internally. And point three, larger companies' navigation is always difficult compared to mid-sized navigation. So those are the reasons why responsiveness of some of tier 2 companies you see relatively quicker and more effective compared to large firms.
Okay, Mr. Prabal Basy Roy, I think, is back with us. Mr. Roy, you were saying the same thing. You thought that this was maybe not necessarily the building of a trend, or maybe it's too early to speak about that as yet.
Yes, actually, I missed some part of the conversation, so Sudin may have talked about it. But essentially, it's like this, according to me. Hello, are you able to hear us?
Loud and clear.
Yes, we can.
Okay, good. See, essentially, in my view, it's like this. Number one, of course, it's too early to call a trend. But it's not necessarily a big company being more nimble than a smaller company issue, according to me. And the reason I say that is because Accenture has been able to play this game extremely well. As you know, has been widely reported, the digital revenues of Accenture is about 52% of its total revenue versus Indian IT companies in the range of 20 to 25%. And the entire growth of the quarter revenue of Accenture this year has been more than the total revenue of TCS, right? So they are playing this game very well. The reason they're playing this game very well in terms of reorientation is because they lead effectively consulting-led and product solutions-led as well. That is the key. And because of that, they're getting more and more customers from the new technology areas. Digital, as we always say, is it's a sort of an umbrella term for social, mobile, analytics, cloud, IoT, etc. So the clients of that, who are giving businesses to Accenture are people like, Google, Facebook, Uber, Airbnb, and so on and so forth. That clientele is looking for solutions based on a consulting-led approach, because you have and that is where our Indian companies are weak, and that's precisely what Vishal was trying to do for Infosys, by the way. So that is one of the big issues which is facing the large IT companies. As far as the mid
Okay, I think we're having still some trouble with the line, but we get the point that you're making, Prabal, which is that it's typically the share of the consulting pie that Indian IT services companies have not done a very good job of, especially the top line ones, and that companies like Accenture have done a very good job of, which is what's giving them the larger share of the future business. My question then to Sudin would be this, that who do you see being able to make the most of this next big wave in IT services? Because if it were consulting, then actually, let's be honest, the big four in consulting, which is the EY, the Deloittes, the KPMGs, they're also doing a fabulous job in technology consulting right now, and they're giving the likes of Accenture, etc., a big run for their money. So what portion of this business will really come to Indian IT companies, and which ones of them do you think stand the best chance to gain from it?
Sure. I think there are 2 points, I wanted to add to just consulting led. One I have already said earlier, but let me just repeat that briefly. I think business process and the client's domain understanding is extremely important. You should be able to add a value to your client's experience of interacting with you. So more that ability, I think clients are more interested to interact with you. So that's the second point in addition to consulting-led sales. Third thing, I think what has happened is a lot of the buyers of these type of solutions are not traditional IT buyers. So they don't know the offshore model. So they prefer the people who are onshore. They prefer the people in the same geo or region, at least for the larger part of a upfront engagement. So, you know, unfortunately, the visa regime and challenges in that, those have become few additional problems for Indian IT industry. So combination of things are working, against Indian IT. I think, you know, the problem is, as I said earlier, the transformation paces are very small. And I must say that I think the larger Indian IT companies group, possibly except TCS, haven't really made a clear direction and are not charting on that path for a substantial period of 18 months or 24 months. There's a flip-flop of strategy. There have been changes intermittently, etc. And unfortunately, in case of TCS, the path is charted out, but they're still aiming at a lower end of the pyramid. For example, even if they want to pitch an automation, they want to pitch automation on IT ops as against business process automation. So I think that's the really challenge for Indian IT industry.
So Sudin, who is doing it right? Sudin, who is doing it right?
So that's what So to me, really, today, I think there are pieces which are being done rightly by some of the top two companies, both TCS as well as Infi. Right, Prabal said just now, I think, you know, there's again uncertainty in Infosys, which is creating a challenge. So really no one in tier one who have a solid direction. In tier two, there are companies which obviously are doing well currently, those who are focused on specific areas. Mindtree in pockets, Syntel in pocket, some of the other tier 2 companies. I feel that, but again, I don't want to call any winner at this stage because it's too early to call anyone winner.
No, just who's best positions. It's interesting you said Mindtree because Agam, who tracks IT for us here at BloombergQuint, pointed out that, whilst most of the mid-cap IT companies don't give you a digital revenue number, Mindtree, I think, has given a number of about 43%, which is twice that of the about average 20% that the top-line guys get from digital. Now, it's also a base thing, but nonetheless, the fact that you mentioned Mindtree is interesting. Who else would you add to that list as best positioned to be able to take advantage of these changing winds?
So I think, from a different perspective, Persistent is another company which technology-wise very superior to deliver these solutions. They have a right relationships in the place. So that's another name that comes to my mind. Only challenge for them is that they can't go and deliver the same solutions to end user. They typically tend to work with another technology company like, say, Salesforce.com or some such company. And then with them, they try to work with end user organizations. No problem. So that's another company which I would name if I had to pick two who are ready to deliver digital solutions.
Fair call. Sudin, we'll leave it at that. Unfortunately, out of time at this point. But thanks for joining me today.
And out of Prabal as well.
Out of Prabal as well, yeah.
On the show.
Some trouble with Prabal today. But that notwithstanding, I think we still managed to get...
Oh dear God. Before you rhyme anymore, let's quickly close the show. Thanks very much for watching Indian Open. Up next is the FNO Show.